Sitting next to me are three people focused on making long-term bets to solve some of the world's most difficult challenges in fields like climate tech, renewables, quantum computing, and smart materials. But when we were chatting before this panel, all of them had quite different views of the term ESG, which is a framework used to measure a company's non-financial performance from an environmental, social, and governance perspective. Now, you might think that companies with good ESG ratings are good corporate citizens driving a green revolution, but in some cases, it's been little more than a box-ticking exercise. And even if we focus on the companies in the clean and green energy space, those stocks have in recent years typically lagged behind the broader market, and hedge funds are shorting those stocks, according to a Bloomberg analysis published this week. Compounding these issues is a growing movement, particularly in the US, to label ESG investments as woke capitalism, and with companies even scrubbing the term from their websites in acts of so-called green hushing. So against this backdrop, I'd like to start by inviting all of my panelists to answer the following question. How do you think about the term ESG, and how does it relate to your investment strategies? Let's start with Ed.
So the way we define it is ESG is the how. It is the process, it's the input, but it's not enough. What also matters from our point of view is the impact. And the impact is the impact that you have on society, on the environment, it's the outcome. So that's how we define our terms internally, and for us the two things go hand in hand.
Okay.
Impact being the most important.
Okay. Mohsin.
So at the Qatar Investment Authority, we are custodians of capital for future generations. So that gives us a long time frame to help navigate and provide opinions to our investments that we commit to through both public and private and through our fund investments that I help oversee. For us, ESG, today it's called ESG. When I kick-started several years ago, it was always part of our DNA to ensure that the best outcomes are delivered through our returns that cover all three aspects. And tomorrow it's maybe called something else, but having that backbench of sustainable investing and delivering the maximum return and delivering a positive impact through our investments, both whether that be in Qatar or through our international partners that we commit to, is as true today and equally as important as other parts of diligence that we undertake, be that investment operational. And so for us, it's a continuation of what we have built on over the last 20 years at the Qatar Investment Authority.
Fantastic. Daria.
Well, you know, I'm a venture capitalist, so when somebody calls World Fund and ESG fund, I say, like, no, that's crap. How is it, like, what is ESG as an investment thesis, right? It's an internal management framework, how to steer companies, which is well meant, but very flawed. And I think, especially as like from my venture capitalist perspective, like using ESG as a stamp on your pitch deck as a fund by fundraising makes a lot of things confusing, and actually doesn't really help you to measure the impact, as you just mentioned, of what you're investing in. I have a good anecdote of that, and I think this really shows how the confusion of terms actually can lead to maybe good investments, but not consider climate tech, in our opinion. One day I was called up by a fellow investor who asked me if I'm interested to look in a pitch deck of a company he was looking at. And it was about sustainable pizza. Yeah? And then I said, what's the sustainable pizza? Like everyone, I love pizza, right? Like I would love to invest in a pizza company. So the sustainability part of it was just, it was a little bit more healthy than others. Same value chain, same supply chain, actually same, healthier. And then I said, look, you know, we invest in decarbonization and scale, this is how we measure that. And then this person came back to me and said, like, I think you're taking it too seriously. And this is the problem of ESG as a stamp, or many other terms we have out there. I think we need clear names, clear measurements, and clear accountability to what we measure towards.
So with that in mind, I mean, when pizza companies are claiming to be ESG, would you say there's been an ESG bubble? And isn't the money all now flowing to AI anyway?
It is already flowing into AI anyway. Good news, you can use AI to build fantastic climate tech solutions.
Yeah. Would you like to add anything to that?
I would almost rather not talk about ESG because it's the process. I'd rather talk about impact. And yeah, I think there are going to be some micro movements in views around what's the right term, wrong term, is this woke, not woke. But fundamentally, we believe that businesses that are having a positive impact on the planet are the ones that will be future-proofed, whether they're in AI or in climate or in food security. So we feel very strongly that is a long-term sustainable investment strategy. And so we only invest in companies and build companies that are going to have a positive impact. And we think that's the macro trend over the next 10 years.
Yeah. I mean, I would echo that. I think it's not an afterthought. It certainly is an afterthought from QA. It's part of our investment process that is implemented across the organisation. I do think there needs to be a democratisation of how we look at ESG. So if you rely on rating agency, two different rating agencies can give two very different scores on approving whether an investment is compliant or not. And there needs to be a fine balance between how much regulation is being implemented, because I think that in part has added to the problem of greenwashing, where limited resources, an afterthought around ESG, has resulted in just ticking the box to make sure that you're compliant, which is a missed opportunity to actually showcase what impact your investments are doing and delivering. And so going back, putting that onus back onto the clients, the investors, the LPs, what part of the ESG is most important is a different answer for a different investor. And I think it's, that needs to be communicated more widely.
And so does that mean different kind of accountability metrics? I mean, what kind of feedback are you asking from your LPs? You invest in, you're a fund of funds, so what kind of accountability do you demand of the funds that you're giving money to?
Look, at the very high level, we are looking to diversify away from our natural resource, which is gas. And so we are obviously, through our fund commitments, through our directs, through the Fund of Funds programme, which is targeting venture and helping to address problems around food security, around climate tech, around renewables, ed tech, health tech. These are all impactful investments. And so in terms of measuring that impact score, we have formulated quite a comprehensive development scorecard, which is assessing KPIs that are important to us. And so these won't appear on the S&P, but nonetheless are a measure of success on how we are allocating capital through our Fund of Funds programme.
Yeah. Daria, you also have an interesting way of measuring the impact of companies. Can you tell us a bit about that?
Yeah, so we look at the world through the lens of climate performance potential. And you already, when we started, I also said no ESG, no impact as a word, because that's confusing. We need something positive and financially inspiring, right? So we looked in the companies and assess what is the potential, overall carbon emissions reduction potential by one specific technology, taking into consideration the adoption rates of competing technologies per year by 2040. And we only invest in tech which can provide a CPP, climate performance potential, of at least 100 megatons per year by 2040. It's like 1/4 of UK emissions a year by 2040, looking what else is happening. It's quite a high bar.
Yeah.
We do that for every investment we we look into. We actually are very thesis-driven, so we look into different sectors, build our thesis around it, and first we say, okay, is it the CPP, yes, no? We see it as a financial KPI. But we also believe, we just talk about it, that the higher the CPP, the higher the potential of the financial performance for the company and for us and our LPs.
Yeah. Now, Ed, you're investing in deep tech, and nobody wants to have another Theranos on their hands. For many, I know you don't technically count yourself as a venture capitalist, but most venture capitalists are, perhaps more used to investing in software, at least tech VCs. How do you wrap your head around what might be someone's entire academic career or their PhD thesis? Like, how do you scrutinize these technologies when you're making investments?
We have an in-house team, and it starts in the very first conversation. So we're talking to the academic before we'll even put in money for a proof of concept. So we're building the business with the academics. So technically we're a venture builder as well as an investor. But yeah, one of the things we're looking for is the mindset. It's a qualitative assessment of the academic or the academic team, and then understanding with them in terms of where we might take the business, what's going to be the environmental impact on diversity and inclusion. We'll look at all of our different metrics, and we build that conversation. So for us, we talk a lot about progression rather than perfection. We understand that at the beginning, it's in practice, it's quite difficult to assess some of these things in a quantitative way, but we want to start a dialogue from day one with workshops, and then we're training and building that assessment as we go all the way through the journey of building the company. But yes, right at the beginning, when it's a concept, that can be very, very difficult. But we'll be looking for the obvious things. And there are some things which are clear no's, so weapons and gambling and so on, but we wouldn't start there. But if we can see a pathway, we'll be looking to map it out with the academic.
Even if weapons are more accurate and therefore creating less collateral damage?
Oh, you've touched on a very hot topic there. So there's a big debate, as I'm sure we're all aware, around defence and ESG. We have a number of companies which are in the dual-use space. We wouldn't back a single-use application from a defence perspective, but we've got 10, 15 companies that are in the dual-use space, and we wouldn't do anything that's kinetic. But yes, I think if it's defence underlined, then that would meet our criteria as well.
Okay. Do either of you want to add to that?
I think, to be honest, every groundbreaking technology can find a dual use in it. There is always the side. And I think in Europe we've been for many different cultural, historical, structural reasons, very hands-off investing or seeing that or kind of acknowledging this fact. But I think that just at core, and I think what we have to do, it's also not a bad thing. For me, we also would not invest in weapons, obviously, but I think in context of climate and planet resilience, you cannot not think about a dual-use application or how that would actually, energy resilience, right? Energy, consistent provide kind of access to energy can also be used against one in a war, right? So I think we just have to start this conversation and be aware that if Europe doesn't do anything, it doesn't mean that things are not developing elsewhere.
Okay. Going back to screening investments, Mohsin, you're typically investing in funds, but you have a PhD in nuclear physics. How has that informed your investment approach?
I mean, I think it's a transferable skill set, and I don't think in terms of providing, at times, out-of-the-box views. And that's true, I think, across the QA. So we have 600 nationalities are based in Doha, having backgrounds from not just finance, but across many different disciplines, brings a nice collection of skills that makes us, I think, better investors. And so we can apply our learnings and our collective experience in driving our investments forward.
Daria, I know you evaluate the environmental credentials of your investments, but what about where the funds come from and how they might be reinvested?
At Worldfund, we are quite, I would say, balanced up. So when we started, and we started in the middle of pandemics, and we did want to raise at least 300, a bigger fund to be able to invest in deep tech technologies, solving the climate problems. So we kind of went out to our entrepreneurial network first, and we got a fantastic commitment there, and then built on top of that by approaching, institutional investors, banks, family offices, fund of funds, sovereign funds. I think, but it's always I think, especially in context of climate, of course, one can ask itself, where does it make a difference where the money comes from, where the capital comes from, if it's an oil corporation, and it's, and I think for us, we don't really have any corporate investors.
But if Shell came to you tomorrow and said, we want to give you 300 million euros, what would you say?
Look, don't quote me on that. I would say yes, because then I know I could actually invest the 300 million in fantastic technology and multiply our ecosystem. But within our team, there would be a very strict no as well. So we kind of said, okay, let's not fight about that. There is a red line. We just don't want to cross. We always look what happens then with the profits, with the returns for a respective investor, if it would be Shell, and then decide case by case. But we didn't have to decide because we were focused on institutional investors.
Let's talk about the UK and Europe, and what are the sort of most exciting technological developments in Europe and the UK in terms of deep tech opportunities. Mohsin, you're obviously looking around at the moment for VC funds to invest in. I think you're spending a lot of time, you're getting a lot of applications for the fund of funds. Tell me, what are you seeing in Europe, and what are you trying to attract to Qatar?
Yeah, look, the programme was announced by our Prime Minister earlier in the year, so $1 billion has been allocated, open to venture entrepreneurs internationally, regionally, domestically, to come to Doha and help contribute towards the ecosystem in Qatar and broadly in the Middle East. Europe has always been a centre of activity. It's the third largest venture capital market, trailing behind the US and China. In terms of climate-related technologies, I think it's one of the leading innovators when it comes to smart materials, carbon capture technologies. And so for us, it's an exciting prospect of tapping into the IQ that Europe has to offer, and seeing what playbooks can be applied to the Middle East more generally and Qatar specifically. So we are inviting applications outside of deep tech, artificial intelligence, machine learning, cyber security, ed tech, health tech, and again, each in its own right, we think has a long-term trajectory to deliver that impact and use that as a bouncing a springboard for investing, both internationally, domestically, and regionally. So I'd encourage any potential applicants to go to our webpage, and good luck with that process.
Ed, when we talked, we had a call before this panel, we were talking about some types of businesses that you've invested in that maybe on the face of it might not seem like the most environmentally friendly businesses, but in the long term could have a great impact in terms of the energy transition. Can you talk a little bit about those companies and how you evaluate those companies?
Yeah, so by the way, we're also very lucky to have QIA as one of our shareholders who share our sort of mission on impact. A couple of companies come to mind. I think the first one would be we're backing one of Europe's leading fusion companies, a company called First Light Fusion. This is a very ambitious project. I remember when I first looked at one of their investment pitches, the total addressable market was 1.7 trillion. So it's a huge prize if they can get it right. It's a high-risk, high-capital business. And with that in mind, it's a huge endeavor and it's going to take time. And that will require energy and power and a significant amount of resources to get First Light Fusion to where we believe we can get it to. So there's a trade-off there. I guess that's one example. We have another company called Snowfox. It's an incredible business that has worked out how to identify areas of natural hydrogen sort of subsurface and how to extract it. But it's an extractive company. And then how do you manage something that we know is absolutely critical and fundamental to meeting net zero targets, but how do you deliver that in a way that doesn't have an adverse effect on the environment around it? So these are sort of trade-offs, some sort of short-term trade-offs to achieve what we believe is going to be a bigger positive outcome.
Yeah.
So we have 1 minute left, so I'm going to do a quick-fire question. So in just one sentence, I'd like to ask each of you if you could place a single bet on a company or technology that you believe will make the most positive impact on the world in the next decade. What would that be? Daria?
That's hard to put it in one. We have 18 in the portfolio.
Just one?
No, I would say maybe it's a bit outside of the box, and I would put my bet on a portfolio company of ours where I'm also on the board called IQM. IQM is a quantum computers manufacturer, but also very strong on the algorithmic part. And it's the European answer to IBM. So they're using superconducting technology. And when we invested 2020, it was not always clear, we were asked many times, how is that climate? But I think today we don't have to ask this question anymore, both on the hardware part in the paradigm shift, but also on the applications they can actually solve and the problems, the climate-related problems.
That was a very long one sentence.
Oh, sorry.
Mohsin.
I'll answer in a slightly odd way. What I hope the next technology to come out will really be to save the planet is around carbon capture. So most net zero targets are assuming 10 billion tonnes of carbon dioxide will be removed from the atmosphere when we pump 40 billion each year. Current technology is several magnitudes below that requirement, and so most projections around net zero will fall dramatically if that technology is not made commercially available. And so hopefully through our Fund of Funds programme we are adding capital and resource to help address these important climate requirements.
Ed?
I'm not allowed to have a favourite child, so in the portfolio, I guess that we're building companies that are trying to develop vaccines for cancer, and we've got 120 companies in the portfolio, so it's very difficult to pick. I think the way I'd probably think about answering the question in one sentence, how would we multiply the effect of every company in the portfolio to maximum value in impact terms? And I'd agree with Daria. If I look at we have 5 quantum companies, and frankly, if one of those companies, and this is not make-believe, this is here now, it's going to be coming on stream in 4 to 5 years' time, companies that can collapse computer processing speed from a human lifetime down to 4 minutes, and then you apply that to drug discovery, to all these different areas, you can see that this is where the force multiplier is. So I would probably pick quantum as well, if that's possible.
Yeah.
That's great.
I also really like the capture and the carbon capture part. We have another company there. We can talk about it later.
Let's talk about this offline. So quantum computing and carbon capture. Thank you very much to my panelists.